What's up, you guys? Welcome back to Business Buzz, where we focus on business, entrepreneurship, and investing. Why is it so hard? Today I'm going to be talking about the recent Netflix news, why their stock is down, and what I foresee in the future for Netflix. Before we get into it, make sure you guys go down and leave a like down below to support our channel, and let's get right into it. Netflix has recently recorded its first subscriber loss in the USA. This is significant because it means that more people quit their Netflix subscriptions than people creating them this last quarter. This is a really big hit for Netflix considering that the USA is their biggest market share. However, it is important to keep in mind that they did gain over 2.7 million worldwide customers in the same quarter. Due to this big news, Netflix dropped over 10% in after-hours trading. So your first question might be, well, why did they even lose these subscribers in the first place? That's what I'm going to get into. Number one, a lot of this may have to do with Netflix's recent price hike. They went from a $10.99 subscription to a $12.99 subscription, and that's a quarter where they lost all their subscribers. Netflix is standing behind this as the reason that they lost so many subscribers. Number two, Netflix is losing content. You may have heard lately that your favorite show on Netflix isn't going to be on there too much longer, and they're just losing good shows and programs left and right, which is why they're having to rely more and more on their own original shows produced by Netflix. For example, two of Netflix's most popular shows ever, The Office and Parks and Recreation, are being taken off.
No, God! No, God, please, no! 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 No!
And as an investor in Netflix, you might be thinking, well, maybe this is good for Netflix. Maybe them making their own original content might actually be a good thing for the future. The only problem there is that Rotten Tomatoes has actually shown that Netflix original produced shows and movies actually get pretty low ratings on average, usually below 50%. The final reason they may be losing subscribers is due to heavy competition. Streaming websites like Amazon Prime, HBO, and Hulu are some of Netflix's current biggest competitors. There's also a new one coming out called Disney Plus, which is going to be another huge competitor for Netflix. Now let's delve into my opinions on the future of Netflix's stock. Basically, Netflix is trapped. They are really oversaturated in the market right now, and they need to up their prices. But obviously, you saw what upping the prices did to some of their subscribers. So they're kind of in a rut right now. It's also important to consider that Netflix's PE ratio is a whopping 125, which is really high and not great for a company like Netflix. Comparatively, Disney's PE ratio is 15, and with them about to come out with Disney Plus, it's not looking too good for Netflix. Also, Netflix's business model as a whole is pretty controversial. Their debt to equity ratio is a bad 1.8, and they burnt through over $3.5 billion in 2018. So long-term wise, we don't really see Netflix doing too well, but who knows, you just gotta do your own due diligence and find out if it's a company you wanna invest in or stay away from. Thank you guys so much for watching. We make videos like this all the time, so make sure you go down and hit that subscribe button, and I'll see you next time.